You're listening to Toronto's #1 real estate podcast, powered by Watson Estates. The most successful local real estate investing starts right here, right now. Here's your host, broker, investor, and social media influencer, Bradley Watson.
Good morning, investors. Bradley here from Watson Estates. Bright and early this Wednesday morning. It is Hump Day, May 27th, 2020, and we're here with some more great information as it relates to the Toronto real estate market. With COVID-19 still in our midst, we're trying to figure out what's been going on in our marketplace on a daily basis, me included, researching the greatest news as it comes out, try and create our own framework of thought. And today we've got some good stuff for you. We're going to start off talking about, is Toronto entering a slump phase? This comes from Toronto Stories. It is the #1 article of the day, all over the news, all over Google. You might have even seen it. If you haven't, it's okay. We're going to explain it for you, and we're going to break it down on what the Real Estate Investment Network has to say about Toronto's real estate market. Then we're going to go in and talk about what is happening in our real estate market across the city. I want to take some time to point to what some of the things that other realtors are saying is going on as they're doing showings, and what kind of impact is pretty much what's going on with COVID around us and how it's changed things in our business and kind of what we're experiencing. And I want to share my 2 cents as well. And then I want to talk about these articles. You might have heard Scotiabank posted this huge decline. I think it was somewhere over 40%. And so I want to talk about that, and I want to talk about whether or not banks are preparing as the bad loans approach. We've got all these mortgages being deferred, not just in Canada, also across Latin America. We've seen in this bank and all over the world, we've got these bad loans potentially approaching. And could that be the catalyst for influencing prices here in Toronto? So we want to cover that and make sure we're informed. Now, before I get started, I also want to kind of talk about some of the other news that's kind of out there, a little bit more lightheartedness. You'll probably have seen the news on the social distancing circles. And I think that's a good thing. We got to try and avoid some of these crazy amounts of people in small locations. But then there's also been some more extreme or intense news. If you haven't seen it, I actually couldn't even read the article. I didn't want to read the article. I had my wife, Sandra, read me what happened in these long-term care homes. The military's kind of put out these reports, and it is terrible. They are really bad reports on some of the things in the treatment of these seniors in the long-term care homes. If you haven't seen it, definitely it's important to know. It's just so tragic. And the other thing I've seen is that they actually took a poll, and half of Canada feels the government is hiding something about COVID-19. Just in Brampton, which is kind of where I grew up, it's actually recently been identified as the epicenter for COVID in Ontario. And they were kind of talking in the article about how there was one area in particular that had an outbreak, but they're refusing to tell us where it is. Like, they won't tell you what zone it is. So for this video, we're going to do a little hashtag escape Brampton. Anybody who kind of grew up in Brampton, such as myself, knows there's this big, I guess, running away or escaping of Brampton. It seems to have been like the dream. The people who grew up in Brampton is like, one day we're going to get all the money we can, and we're going to buy a house outside of Brampton. Just getting this kind of escape, right? But though the population is growing quickly, it seems to be a really funny thing. But now you know why, right? Like, I guess you can see why here in these numbers. So we got a lot going on, but we're not going to dive too much into this news. Some stuff that I've seen as highlights that I thought were worth pointing out. But I want to talk about Toronto real estate. Shut up, you realtor. Talk about real estate. Done talking about all these social circles. Sorry about that. Okay, we're going to move on. We're going to talk about, I want to start with this #1 article. We put the good stuff first. This article came from Toronto Stories, and it's called "New Report Suggests the Toronto Real Estate Market is Entering a, quote, slump phase." So this, as we're going to see in the article, comes from the Real Estate Investment Network. I would say it's times like these when you get things like COVID or back in 2017 when the market is going nuts. So I get a lot of people asking me, hey, have you ever heard of REIN? Hey, you ever heard of REIN? Yeah, from the thousands of people that ask me about REIN, I've heard of REIN. So the Real Estate Investment Network is a very big organization, and they have a very large membership. In fact, I think they're one of the largest, if not the largest, in Canada. And they advise their membership, and it's a pretty expensive membership. If you wanted to join it, you could. They do a good job, and there's a reason why there's a ton of investors that use that network in order to stay informed in what's been going on. Well, they just recently released a new report called the Real Estate Cycle Update Report, COVID-19 Special Edition. And this is what the article says. Though while many housing markets across the country remain in a slump, one city is about to enter into a, quote, boom, according to REIN. And they said, this was the vice president of research for REIN, said, "We released this report because we wanted to create something that was timely, important, and relevant so that investors and homebuyers alike are armed with Canada's most trusted source of real estate investment information, especially during the coronavirus pandemic." And I've talked to people who have attended seminars, and REIN likes to put on these kind of free seminars. You can probably jump into one. I haven't sat in any of those, but I've seen a lot of their reports in the past, and we've used their information as we're kind of compiling ourselves. They have unique perspectives, and of course they're not going to come at things the exact same way as anyone else, or else why would you pay to be a member? So they have their own methodologies. In fact, in creating this report, they use two methodologies, including the long-term real estate success formula and the real estate cycle scorecard. And what they did is they've kind of researched, they got major markets in BC, Alberta, Ontario, and they're saying those are in steady declines except for one, which is Ottawa. And this article kind of talks about this idea of a slump phase. So according to REIN, a slump is generally characterized as a market slowdown. However, it can be a great time for, quote, uniquely positioned investors to take advantage of the, quote, opportunities that are bound to hit the market sooner or later. Very, very kind of vague. What I hear there is if you have cash, right? Like that's what I hear. If you're a uniquely positioned investor or opportunities are bound to hit the market sooner or later, that just says you got cash in your pocket, which is the case right now, right? That's what a lot of investors and we've done interviews with investors, and that's what they say too, have cash. And they did 3 provinces, 5 cities, Vancouver, Calgary, Edmonton, Toronto, and Ottawa, and found that Canada's capital is the only one in a, quote, boom phase. And their logic for it is because of it being located where the federal government is, that it's insulated from some of the job loss impacting the country. Funny how that works, huh? How is it that the federal government, they haven't had any layoffs either. It's just municipalities getting absolutely crushed. And while I'm on the municipalities, side plug, we're going to be putting out a video today on the municipalities and the layoffs and all these struggles that they're facing with this incurred deficit that they cannot run. That's going to be released on YouTube today. And tomorrow morning, it should be on Toronto's #1 real estate podcast on all places, wherever you get your podcast. So keep an eye for that. It's great content, and it's definitely important and still relevant because nothing has been done. But here's the highlight that I want to take out of this article. Toronto's real estate market is at the beginning of the slump phase. This position in the cycle makes buying and holding possible, renting to own tricky, and fixing and flipping best left avoided. So there you have it. That's their summary for what that category is. They've got a recovery, a boom, and a slump phase. In the slump phase, it means that you can buy and hold. It seems like buy and hold is pretty much always possible. In fact, if I'm looking at this little chart, buy and hold, you got good, possible. Tricky, avoid. In a boom, they're saying to avoid buy and hold, which is interesting because, like, okay. So they've got this kind of little metrics that they use, and that's fine, no problem. People buy into that system, and they're saying in this setup right now, a buy and hold is possible. Renting to own is tricky. I don't know why anyone does that anyways, unless you're an investor, great. But as a renter, why would you ever do that? But I guess they're appealing to the investor side, and there's an opportunity in there, so why not? And fixing and flipping is obviously left avoided because that is a very high risk practice, especially if the market did happen to be going down in the short term. What's unique about Toronto and the GTA is that while borders have closed, permanent residency applications are still being processed to the degree that they can. Behind the scenes, immigration policies have not changed. Once it's safe to do so, the borders will reopen, and when they do, immigration will have a big impact on Toronto real estate market. I don't know if I am totally bought into that. That's probably one of the things they're saying, oh, well, here's some of the good news, right? Like, that's a good news thing, and you know me, I like to jump on some of the good news, but I don't think that that's shining as much as they're kind of implying here. The immigration is not going to go through the roof. Like China, they closed down. They had this kind of removal of the COVID-19, but they stopped investing in foreign countries. In fact, they've been pulling their investments back, even pre-COVID. Now, is immigration going to continue? Eventually, yes, of course. That we need it. We are going to do whatever it takes to to drive immigration to Canada, making it easier, whatever that takes. But in the short term, like, borders are going to be closed for a while. I don't think you're going to see this mass migration that is maybe being hinted at here. But we'll see. Time will tell. As for how long a cycle might last, it's not as short-lived as you might think, Hunt says. It really depends on the city. So again, they are trying to forecast the future. And like everybody else, the thing is we don't know what the future holds. Like, we're all playing guessing games here. Let's be honest. The key will be in watching for indications of recovery such as economic activity, employment, immigration, and new rental demand. So the rental demand, don't need that right now. We've got a ton of rentals. Employment is taking a hit. It's better than we thought, so maybe there's some good stuff there. Economic activity with the reopening is good, and immigration, they tend to think is a good thing, but we will see. So those are some of the highlights that came out of this REIN article, and I mean, I think it was oversold. It's definitely the top article of the day. I don't know if it's something that's like, maybe there's not enough news today. I don't know why it's number one. It's not amazing, but it's definitely important to see because the real estate investment network makes up, in my understanding, thousands, definitely thousands, maybe tens of thousands of investors across Canada. I should have researched those guys, but you can go take a look at their website if you want. You can look them up. I am over hearing about REIN because I hear about them so frequently. But they are a great place. You can get some free seminars, go learn some stuff. They've got reports like this one that you can learn what's been going on. So if you have not heard about them, go check them out. But then we've kind of got this other side here where I wanted to talk about what's been going on for realtors, right? We've kind of talked about this idea of a feel in the market. We've got the numbers, we've got the stats. We're still waiting for the stats for this month. A lot of the stats being used are for last month. But while this is all going on, we have the last 2 weeks had big changes in the way that real estate is being done in the GTA. Big changes. So I want to share this article. The article began highlighting pretty much old news. So I was going to skip over it. But the second half of the article is very good because what they do is they start taking quotes from realtors talking about their experience in doing showings and all that fun jazz. And then I can kind of comment on what I've been experiencing so you get an idea of what a showing actually looks like. What does a process feel like these days? So here's one quote. It's very challenging because no more than 2 adults are allowed in the house. Children are not allowed in the house. We have to go with masks and we have to have either gloves or sanitizer and only 1 appointment per time frame. I tend to see most appointments allowing 3 people, 1 agent, 2 adults. And I've had some that require us to wear gloves. Sanitizer, I see sanitizer all over the place too. So yes, these things are all expected. And I think masks are going to become more and more of a criteria. I would say half of the people in the showings have disclosures that need to be filled out before they'll confirm the appointment. Well, they say before they'll confirm it, but then they do confirm it because they've still got systems in place that auto-confirm. So it's kind of ironic how that works. But they want us to be doing these disclosures, and that's fair. Like, I get it. You have randoms coming through your house. Here's another quote. In the past, you could book appointments for an hour. Now the showings are half an hour. I've seen that. That's actually true. That is going on so that we don't overlap. So there's been kind of this idea where you can book, 2, 3 in an hour. And we just say, hey, just so you know, there's another showing at the same time. Just kind of coordinate with them. Yeah, no problem. Because we've got a window to make showings easier. So what that's done is when we're doing our showings, we need to spread them out more, give us a little bit more time, make sure we're showing up on time so that the other buyers, if there are other buyers, the only reason you're doing this, by the way, is because there's still buyers, right? Like, you would need to shorten the time frame unless you're still expecting traffic. So guys, hopefully you're hearing in the way we're doing our business, these models are kind of built for a very still thriving real estate market. Any listings that's going on the market is holding back and getting offers, and they're getting 20 to 25 offers. There are 25 people offering on the house. There are 24 who are not getting the house and going to the next house. So that's obviously a unique, specific example for certain markets. That's not happening everywhere. But just yesterday, I shared an example of our office mentioning the same thing in Etobicoke. So this is happening across the city in different kind of markets. The markets that have been historically strong are still strong. They're saying demand has come back in the past 2 weeks. This agent Rodelio Cuevas, said last night I was in a multiple offer situation, a first-time homebuyer's place where we had 15 showings in one day. It's a surprise, but there are a lot of buyers. So they're buying these smaller homes, 15 showings in one day. So 2 weeks ago, we were not seeing that, by the way. This is definitely a new thing, but it shows you how quickly the market has changed in the second half of this month. Literally every week, things are changing. It's crazy. I have multiple offers in many of the areas that have always been the most popular. In East York, there are $1 million properties with multi-offers. In neighborhoods that have always been in demand, I don't see any downward pressure. Is this what you're hearing in the news? Definitely not. Is this a story that should be mentioned? I think so, right? Maybe it's not, even if it's not everywhere. I'm seeing it in the markets I'm playing in right now. But let's assume it's not everywhere. It's still important to mention. So now you're hearing it, guys. There is still a lot of demand in certain pockets of the city. And that's what's keeping our market. And I think that's why the numbers are going to be shockingly good this month. We'll see. There are more opportunities to buy condos than single-family homes as the rental market softens, and there are a lot of vacancies in condos at the moment. So I do think that this kind of condo market is going to be the one that's going to take the biggest hit. That's kind of talking about, Airbnbs if they did come on the market, and these single-family homes where you've got first-time buyers, right, where they maybe are a little more hesitant to get in, not 100% confident of their jobs and their careers. So I can see the biggest hit happening in that area, and we'll see. We'll see, guys. I think that it's important for us to note what is going on. I even when I'm experienced, like today, we're doing 5 showings. I've got clients that sold their condo very quickly, I might add. And now we're going out and we are seeing, like yesterday, we had one that had multiple offers. So we were kind of playing it by ear. They were looking for kind of a 3-bedroom in and around the city, semi-detached or detached for under $1 million. And you might think, what? Under $1 million? That's a joke. Honestly, guys, a month ago, that was possible. But now the best stuff we're seeing is just over $1 million. So it's getting more and more tight. Prices seem to be rising, at least in the segments that I'm looking. But I'm open to criticism. We got a lot of realtors, a lot of brokers following us. And if you guys are seeing something different, if you're seeing where there's deals or opportunities, let us know in the chat. I know you guys are going to want to keep those in your own back pocket. But share it with a homie. Come on. There's not a lot of people listening to this podcast. No one's watching. Share a tip. Okay. And so this other kind of, I hope you guys are seeing the opposite side of what the Real Estate Investment Network has kind of said too, right? Like they've been a little bit more critical of this idea of a slump. And they actually are considering it like a long-term slump. But then we kind of see this other side. Now, here's another article talking about the CMHC. We saw that. And it seems to be everything in the last week has been talking about the CMHC thing. But they're talking about this idea that a rapid increase in listings because of a mortgage relief running out, right? So you're gonna start to see, we're gonna play on that in a minute. We're gonna see what the banks are doing in response to this. But from where I sit, and you guys know I'm going through a ton of articles. We're preparing this every single day, and I think the catalyst, I think it could be 2 things. If you were to ask me right now, what do you think could cause a housing crash? I think 2 things could happen. One would be in the rental space because it's a very strange place right now. And if Airbnb can't make a run for it and these places start coming on the market in droves, I think that could spike. The other side and the more likely side that could cause a big impact and have longer term impacts would be what the CMHC kind of mentioned, this idea of mortgage reliefs running out, right? These mortgage reliefs drying up because the banks have kind of been told, you guys have to do this. And they're like, all right, fine, we'll do it. And it's helped, right? Like we've seen the mortgage loan amounts going through the roof. We've seen delinquencies going down, right? But in the meantime, well, actually, I'm not gonna go there yet because we're gonna get there in a second. Let me go through this article. The main factor that can drive a price correction seems to be listings. So what would ultimately happen is if this mortgage relief were to be pulled back, these guys that have mortgages that they cannot afford will list their properties and you'll see an influx in listings. So not only does an influx of listings need to happen, but the number of buyers needs to not change, right? Like, because we've seen a balance, that balance needs to go away. So something needs to be holding these buyers back from entering the market. But there is such an abundance in Toronto of buyers. I can't see that happening. But if it did happen, that could be a red flag. And so the question ultimately is, well, what happens first? Do we have buyers enter the market first? That's kind of what's been going on, at least from what I'm seeing this month. And this is why I'm seeing more pressure entering the market. Or does it happen where sellers enter the market first, right? If sellers enter the market first, that would put downward pressure on price. Or do we see what we saw last month where both enter the market equally, which maintains an equilibrium, which means, again, not a crash. So out of 2 out of 3 options, we have not a crash or it's going to get better. Out of one of these 3 options, we could have ourselves a hell of a show. Ladies and gentlemen, So people are nervous about getting and looking at homes. So it's harder to sell. However, Tall, this economist or whatever from who the hell knows, because I've jumped down in the article now, Vicky Tall, managing partner at Forest Hill Real Estate. Damn, realtors are so biased. They said that April to May, the showings and sales have increased and people are becoming more comfortable with new reality. We've seen that too in our brokerage, right? It's not hidden news, guys. Showings are going up. Sales are going up. This is not rock bottom no more. My clients want to see it. Virtually has not replaced that. I made a note here. They're talking about this idea of virtual show viewings, and I graze over it a lot. But I'll give you my reason for that. The clients that I have, they want to see the unit. I'm not putting in offers without seeing them. The ones that I am putting in without seeing them, I have a place where I'm able to still go in and see them. Like, people are seeing these units. And not only that, the selling agents want you to see the units. Like, if I'm going to list a condo and I'm going to get an offer, especially if it has conditions, if it has no conditions, then I don't care. That's your problem now. But if it does have conditions, I want you to see it. Because I don't want you to pull out or pull some sneaky game later when you do see it and find out that you don't like it. That's not my problem, and I want you to have that addressed, even if it means you risking your health to come and look at a unit. So you're not seeing these like virtual showings and virtual tours and virtual open houses saving the day and sneaking in the back door and getting people good deals. It's not happening, guys. It's not happening. People are still looking at units. And you'll remember an Ipsos survey conducted by Treb where they found that there were fewer people who intended to buy last year, but there was still a pretty healthy amount. There was 27% versus the 31% from last year, and it's in line with our 5-year trend. So there's still a ton of demand for people who want to buy over the next year. So let's not ignore demand. Let's be okay with a boost in supply. I am all for that, right? But is it going to outperform the demand, guys? The demand, remember, this demand we've had for years. It's crazy. It's crazy. Even in a market like today, if you're seeing over 20 multiple offers on any property in our city, it's crazy, boys. It's crazy out here. I don't even know what that was. Sorry, guys. Hide that voice. Trying to pull some weird southern accent thing. All right. This has been my advice too, and it stems from prices coming back. If people think prices will drop, inventory would shoot up. That's kind of the balance. All right, let's move right along. So we know this idea of bad loans. I want to sit on this for a second in our last topic, talking about this article. It came from Scotiabank. I'm surprised this isn't bigger news because I think it matters, and I think you're going to, even though Scotiabank's the only bank that's released these numbers, by the way, in the coming days, we're going to see the other banks doing it, and I think it's going to become bigger news. So we'll call this a tip. You guys are in the loop 2-3 days before the major news is kind of publishing this. So this one comes from CBC. They seem to be the only place that's kind of talked about it. Scotiabank posted a profit Tuesday morning of $1.32 billion in the 3 months up to the end of April, a fall of more than 40% from its last year's levels, right? So here we go. On paper, that's the headline, right? 40% as bad loans more than double. The bank's provisions for credit losses totaled nearly $1.85 billion for the quarter, up 111% from its bad loans revealed in the same 3 months last year. So over 100% increase, right? So doubling. That's huge. Higher loan loss provisions don't necessarily mean that all these loans will end up defaulting. Rather, it just means that they aren't actively being paid back as planned. So maybe this is why people aren't highlighting it. But the idea here is it's caused a big problem for the banks because they're expecting a lot of bad loans. Like, loans are not going to be paid back. They're not expecting them to necessarily be paid back, which is going to impact their revenue, right? The bank revealed on Tuesday that 300,000 of its Canadian customers have applied for some sort of financial relief on the $60 billion they collectively owe to the bank. Big numbers. This would include mortgages who ask for interest rate deferrals, obviously, right? That's what's causing all of this. But then what they go on to say is not all of these loans will necessarily end up defaulting, but some may. So the uptick in loan loss provisions is troubling, right? So this is the question mark, right? This is like, are the banks expecting to receive this money or not? And on paper, they're not, right? Like they have to take the conservative approach and say, we're not going to get it. Now, other big banks, Royal, TD, CIBC, Bank of Montreal, their earning reports are expected in the next few days. So I would expect by next week, you'll probably see articles that highlight all the banks and kind of summarize what they're all experiencing. But my expectation is if we're seeing it here at Scotia, we're probably going to see something similar if they're all running their books in the same way across all the banks. And even if that number was over 20 or 30%, forget 40, that's big news, right? Like that's pretty big news. I think they've said that they're expecting the number of deferrals to equal 20%. That was a CMHC account. So the fact that these guys have that kind of drop, I mean, that's actually more than normal. Damn Scotiabank taking on all the bad debt. But here's the thing. They're saying that investors are actually focused on the positives on Tuesday. So check this out. Bidding the price of Scotiabank shares up more than 5%. So on Tuesday, despite this report, maybe there's no story in here because the news kind of like, it's like, well, that doesn't make sense. Their shares drove up 5%. And the reason is because their global banking and market business is doing good. Their wealth management business is doing good. Scotia iTrade is doing good. All these people who want to trade as the stock markets are kind of playing around and playing funny, they're generating huge revenue right now. And so it's kind of overshadowed this bad news, I think. But this is still important, guys. Like the banks, this I think could be a shock. This I think is something we need to be paying attention to. And if we do see an influx of inventory, that could be catastrophic to our marketplace. So once again, I'm going to leave it there. Make sure you guys, if you get an opportunity, listen to our municipalities video/podcast. It'll be uploaded either this afternoon or tomorrow morning, depending on which platform you're on. And leave us a like. Leave us a comment. Leave us some topics if you have anything we want us to talk about. And if you got nothing better to say, then you can add #EscapeBrampton in the comments. I'll see you guys tomorrow with more. Take care and keep it real.